Assalamu alaikum. Hello and welcome to our sixth Fatra podcast. In today's podcast, we have with us Mr. James Ross, who is head of corporate sale at ARP Digital. And Mr. James Ross here will help us today to identify the ins and outs of how high net worth individuals allocate capital to tokenized assets and what does this mean for private credit markets. So, hello, Mr. James, and it's a pleasure to have you here today.
Hi, how are you? It's a pleasure to be here too.
Thank you. And with me, of course, I have my co-founder, Mshar al-Munayikh. So it will be great, Mr. James, if we can start off this episode by knowing more about yourself, your experience, and how do you relate to the crypto markets in the wider scale and specifically to tokenized markets.
Yeah, so I started crypto early in the days. I was Bitcoin. Well, I was starting with Ethereum mining, and then I fell in love with Bitcoin. So what I love to do is, after all these years in crypto, I like to teach people about crypto, and then more investors that come into crypto because the market is very small. And what is really meaningful for me is to put a face, so that you can meet someone in crypto, you can have a coffee with me, and I help people to move money, crypto, through bank accounts, off-ramp and on-ramp, without a headache. So easy for them.
So not just a phase in your career.
It's difficult in the crypto to put a face. So everybody goes to these apps, does KYC, KYB, and they don't know who's behind. So for new people coming to crypto, I think it's very important to put a face so you can trust.
Exactly. I think putting a face to people that you trade in with crypto really put some trustworthiness into the situation itself.
At the end, we're all humans, so we can have AI, we can have apps, but at the end of the night, we like to have a coffee with someone, sit down, know who he is, like old times in banking.
Exactly.
We'd really like to know what do you do at ARP Digital. ARP Digital is one of the leading platforms when it comes to the crypto and blockchain ecosystem in the GCC. So can you tell us more about your experience over there?
Yeah, so what we do, we got an infrastructure that we can do cross-border settlements. We do OTC, so that means people with normal currency like dollars or USD currencies, they can buy Bitcoin, they can buy USDT in a regulated way, and they can transfer between accounts, they can pay in other countries, so in an easy way and regulated.
Perfect. If you want to delve into our first question, so since you have a vast experience and you have been within this space for a while now, are you witnessing any switch in the allocation of capital when it comes to crypto native investors? I mean, with the rise of tokenized assets and real world assets, how are you witnessing this from where you stand, James?
Yeah, so like we know, most of the cash right now sits on Bitcoin, I think around 55%. Then we got stable coins, that's around 15%, growing very fast lately. And then we got other products like real world assets or steady returns, where people that can have an easy return on the money. But the move really, it's mostly the waiting. They're looking for real cash deals, where they can have real cash, and then this is where real asset work comes, because they can access cash directly.
True.
Yes, James, allow me to ask you a question. We know that we have high net worth individuals in the normal financial banking systems. Yeah, in every bank there is a lot of people with high net worth individuals. Now, if I want to see it in the blockchain, where do those funds actually allocated? Are they, idle in stable coins, or are they move around into more yield return funds?
Well, right now, that's why I like to educate people, and these high net worth individuals, they they already have allocated some Bitcoin or some stable coins. Nearly everybody coming new, or the first step is always to buy some stable coin. So they can see maybe they got Qatari Real or Bahraini dinars, and they want to access crypto. The easiest way is to on-ramp and buy some USDT. That's what I always teach. Then once you got USDT, you know how easy it is to off-ramp and on-ramp. So you can send it to your bank account, have it in your wallet. Once you have this, then you can maybe allocate something to buy some Bitcoin, or you can buy some real-world assets, or you can do your own research and invest in whatever product you want to.
So it's sort of like a stage. You start off with stable coins, and then you move on to real world asset and really get into it.
Here in UAE, AED is pegged to USDT, so it's very easy to have USDT. So instead of having your AED in your bank account or your Bahraini dinars or your money reals in your bank account, let's buy you some USDT or USDC or another stable coin that you have trust on it. And you can see how easy to move, to send to your friend or to invest, to move it around.
So this is where they come to you.
Yes. Yeah, so mainly the kinds we have in right now is a come and buy your a stable coin because they need to pay someone or use it, or they're looking for a return. And then we got the other clients that they come and buy Bitcoin directly from us.
Perfect. Yeah, I'd really like to pick up from where you ended, James, because definitely you have been in serious contact with investors who allocate a lot of their capital to Bitcoin. And let's take Bitcoin only as an example. I know there are the big market cap coins are also related to my question, but what would it take those investors to switch them from only allocating to Bitcoin, for example, into transferring some of that capital to a yield-bearing product similar to what we're planning to do at Fatra? Because what we're trying to do at Fatra at the end of the day is get that allocated capital extended as loans to SMEs, and then eventually that will mean yield for that individual, high net worth individual. So you know their mindset very well, James. I think your experience says that very well. So what do you think the reaction would be, or what would it take them?
Well, even for me, like you said, I've been many years in crypto. For me, it can feel a bit messy too. So it depends on the project. It's a bit messy. So even for me, when someone comes, oh, I got this investment, even for me, it's difficult to find out what. Imagine someone that comes new to crypto. So the second thing, it will be regulation. So if you want to invest something, you need to have some rules, everything clear, so that the investor feels safe and clear. Then the risk, you need to know what risk do you have investing. So if it's offering you X percentage a year or this, you need to have a risk on it. And the numbers, it has to be clear, the numbers. So you have to have a good white paper. And obviously always the downside, and it needs to be clear. Otherwise they won't invest.
Makes sense. I think Mshari, we already discussed regulation a lot in this podcast. Maybe you want to add to the discussion that James had, how we plan to add credibility to the project by having a firm regulatory framework to Fatra.
I think regulation and the GCC still needs some time to breathe, and really, we're trying to go into a world that is very new, respectively, concerning when you go to the GCC. The appetite is not as strong as we want. But concerning regulation, I think the UAE is very progressive in that point, and connecting with entities such as VARAS, which is government backed, gives strong credibility when venturing in and having that sort of what I'm trying to say is just gives you more credibility.
Yeah, here we have Bada that's doing an amazing job here in the UAE. So basically, and we have very good projects here in real world assets too, and they're regulated by Bada, so it's easy. So when it's if you're new to crypto or you don't know what you invest in, but it's regulated, it's a product that is regulated, that gives you a clear image what you invest in the money in. So if you're regulated by BARA, it gives you security and you're backed up by BARA.
Yeah, not some scammer behind a laptop.
Yes. And yeah, like I always say, we're very unlucky, but in crypto, nearly more than 95% of the projects, we have to be careful. And that's why regulation is always very good to come here.
Definitely. Again, if you allow me also, Mshari, I'd like to extend my question. When it comes to high net worth individuals' mentality, I'm sure you're not only in contact with regional high net worth individuals, but also on a global scale. And we'd really like to know, and our viewers would like to know also, how do they view the GCC market and the regulation that Mshari also explained when it comes to real world asset tokenization that we should have in place. How does it influence the investment decision that those high net worth individuals who are coming from different places in the world? So what is your feedback on that?
Yeah, so here we're ADGM. I can't remember what year, but many years it's been already here regulating. Now we have BARA, we have other entities here, and this gives a good structure. Like if you in Europe, we got Mika now. In UK, we nearly lost. We don't even know how to buy. Even my dad back on the day a year ago, he wanted to buy Bitcoin, and because he was older than 80 years old, he couldn't buy. The platform didn't let him allowed. So we're very lucky here in the UAE to have this regulation, and these high net worth clients, they're looking for this and security. So GCC countries offers this security, and the regulation is more important.
James, is it fair to say that capital is liquid but not yet productive? I mean, in the crypto world, mostly the capital is liquid, extremely liquid. But liquidity alone doesn't create, economic value. Whereas, in Fatra, where we structure a way that we provide funding for those SMEs and provide yield for those investors that continue and venture in Fatra. What do you think of that?
Yeah, I think the biggest problem is not the asset itself. So that's what Fatra comes in. I think you're building a asset layer that helps this type of clients to come into the investment or to use your product. The return is important. That's mainly what the clients are looking for. So we can have liquidity and USDT, and you can go to platform and they offer you X amount, a huge amount. We can talk about 25, 30, 50, even 100%. But honestly, there's going to be a problem with it. So we need to be honest with the returns and explain the numbers really good to the customers so they know where they're investing.
Yeah, so rather than just staying on the sidelines, you can go into these companies and invest and look forward for that yield.
Yeah.
Regarding the aspect of the speculation that definitely you have been long enough in this space, at least from our side, we are witnessing a shift, and we'd really like to know what is your view on that. For a long period of time, speculation has been a big part of the crypto space. And we are witnessing that, again, the taste of investors are shifting towards allocating their capital to yield-bearing instruments. Again, based on your experience with your clients, how are you viewing this?
Yeah, so the main issue is always been the same. And since I started in Ethereum mining, it was the same. So I will mine Ethereum, and then how do I cash out to my bank account? How can I use it? Now we can use USDT, they offer you cards, but at the other day I wanted to have it in my bank account. Yeah, so the demand of RWA is there. So I see the demand, and there's more and more platform offering this type of products. from real estate, from hash rate, tokenizing planes. There's lots of so the demand is there. So if we fix the flow, I think everything will grow.
So at what point, James, do capital stop trading and go into, allocating? So as an investor mindset, they shift from trading when they accumulate enough wealth that they start thinking, I'm going to stop trading and I want to allocate money to an entity that gives me yield returns. Yeah. Similar as Fatra. When do you think that shift in mindset begins?
That's why it's a big thing, educating, and that's why you got this podcast and you're doing an amazing job, because we need to teach. It's teaching people, these investors, that maybe they're very happy buying Bitcoin or buying USDT, but they're looking at other projects. They're interested. Maybe they've got small allocation or got big allocation. So that's the main thing that we need to do. Once we explain our clients, like I explain every day, and mainly 90% of my work every day is sitting down with client and explaining, this is crypto. We have a phase. You can on-ramp USDT or USDC, any stable coin. The same with real world assets. We're very early age. Like it was like back on the day, Bitcoin or Ethereum or Solana. We're very, very early. So imagine that once it start coming in again, the amount of public they will have on your buying RWAs.
Perfect. So we do understand that not every RWA project will succeed. A lot of them won't. So what kind of advice do you have for us as a tokenization project, and also to anyone watching this podcast who has this in mind or is building an RWA project? What are the points that would lead to failure from your own experience?
I think anyone starting a new project or starting something, a token or RWA, don't try to copy other projects, because that won't work. So try to find a solution to the problem. So try to find what people need and then do the product. Don't start a product that, okay, I think it's good, and then try to sell it. So if you can solve a problem, you got people to come to you. So you got this, and then once you solve this problem, always regulate it, have a face, ensure who you are, so people feel comfortable. Because it's like when you go to the bank, I go here to a local bank. What bank do you go? It's a bank that you see all the time on TV, publicity, who's behind, who's that. So then you go there. So it's the same. You're selling a product.
Exactly.
So, James, how important is entry and exit flexibility for investors? Because crypto investors have a mindset of instant liquidity. So how important is that for them?
Especially, if I may add also, James, especially that we're talking with RWA and tokenization here, where your experience and what we're trying to do becomes more relevant. A lot of our investors might want to realize their capital gain in fiat, and of course the same at the end of the day for the SME. The SME would want to have that lending in fiat. So the entry and exit, as Mshari kindly provided, I mean, how can it be done in a very seamless and straightforward way?
Well, I think it's one of the most important things, how to enter and how to exit. Because when the things go good, you want to enter, and then maybe you want to cash out, or it goes good, but you always want to find that's why I teach people how to buy Bitcoin or a stable coin and get off, on and off. So so the same with RWAs. So for a client, non-crypto, there's got GCC currency on his bank account, or dollars, or any currency like that. He wants to buy your RWA. How can he do it? Is it going to be with a credit card? Is it going to come with cash? How he can buy with a stable coin? So you need to project all this to a client, because the amount of people in crypto worldwide is really tiny. It's very small. And the real value coming in is all these new people, new users coming in that they got the cash and they can invest in you. So you can bring more liquidity to the market.
True, and to realize whatever you're mentioning, James, do you think the infrastructure is there? I mean, do you think that other players within the ecosystem have to develop their own projects in order for us to, have a very seamless experience, or do you think we still need time for that to happen? I mean, where are we to realize that seamless experience?
Yeah, if you're talking fiat to stable coins, we offer it at ARP, so we do it seamless. You can KYC with us, KYB, you're regulated, and you can seamless off-ramp and on-ramp your currencies. So that's really easy. That's there. We have all the infra to do it, and we do it every day. And we work with every bank, and there's no issues. So it's simple and it's there.
Perfect. Perfect. Can you tell us if you have any experiences with RWA projects that utilize your services when on-ramping and off-ramping? I mean, if you don't have to mention the name, but I mean, can you just briefly give us and the viewers your experience on how the seamless experience, helped them a lot?
I see a big demand in the public right now for real estate projects. So we have a real estate project in the UAE, and I got lots of people asking me, "Oh, James, have you heard this project? How is it? How can I access? What do they offer? How does it work?" So that's what we get in here, mainly real estate projects. There's other ones that are coming out now with even with hash power from Bitcoin. So you can have real world assets, but with hash power. So there's different products, but mainly what people know, it's real estate.
Yes. I mean, yeah, real estate has been picking up when it comes to tokenizing real estate assets, especially in our region. And it's good to know. I mean, this is a very different asset class, but it's good to know that whoever is allocating capital there is not having a very tough time on ramping and off ramping. I mean, it's a very good signal for the whole RWA space in general, because honestly, yeah.
Yeah, it's like DeFi. So it's like when you buy a house, you got your property, and it's easy to understand for them. So when you're trying to sell another real world assets, you need to explain more than what's a real estate. Everybody knows what's a building and how many times you can divide it. So it's easier.
True. Do you still think we need a little bit more education? I mean, let's assume that the product that we're providing, or any RWA project is providing, there is some individual okay, let's not go into the institutional discussion, but let's talk about high net worth individual. They don't have the previous experience when dealing with crypto in general. So can you go with us through the user experience, from fiat to crypto, and then when they want to their allocations back from crypto back to fiat? So I mean, if you can kindly give us a very very brief steps on how things usually work out with you guys.
Yeah, so what I would say to any user or any person listening to us, the first, if you want to use any services in crypto, go to a platform that is regulated first, then complete your KYC, KYB. That's the first step. Don't trust, but trust in always. Try always to do it, even if they offer you a good rate, or see who's the platform, who are they, and complete KYC. Once you complete KYC, it's very simple, because then you connect it to your bank and you can transfer directly, whatever currency you want to dollars to the platform, and from the platform you can change to USDT, USDC, or Bitcoin, so you can do the exchange, and the same coming out. So you can have a rate. So we charge a fee for converting. It's like an exchange house, the same.
Exactly. I think you agree with us that, I mean, we stressed this before on the podcast. having a very seamless user experience for the capital allocator or the liquidity providers is very crucial. A lot of people will not touch the asset and not invest if the experience for them investing is horrendous and difficult. So if you can add anything on that point.
Yeah, obviously, if you use a client and you got fiat in your bank account and you want to invest, back on the days we used to use PayPal and stuff like this to buy Bitcoin, or they come to you, okay, give me cash. Never do this. Do it regulated, so you got all the statements. You go through your bank, so you don't have any issues. Because we're not talking about $1,000 or $500. We're talking about huge amounts of money, and you want to have someone. If something happens, then it shouldn't. That you have someone that can help you out.
Talking about the typical investor, and if I want to go back to the high individual people, so what makes them or high net worth capital, what makes it trust the product? What are the no-go, the non-negotiables?
Yeah, so this type of clients, they're not looking for price swings, like offer them a huge amount of return. They want something steady. They don't need to have a hassle. So it's not about offering X amount, and they're not retail clients looking for a quick return. So that's the first thing. They want to keep the money safe, so it needs to be a project that they're safe with it. And they're not searching for hype, so they're looking for real business. So this high net worth individuals, they come from real business. They're not coming from a meme coin or anything like that. We're talking about real business, not a hype that someone's gonna do a community and pump it, and then you lose your funds.
And I think the blockchain provides that clarity and transparency within this kind of on-chain transaction that gives them, more thirst to chime in and.
Yeah, that's the beauty of the blockchain. So we can see from the first example, Bitcoin, we can see from the first Satoshi, where did it move, where does it go, everything. The same with stable coins. So we have everything on chain. So we can see where the transfers go, where does it go. So we can track everything. That's the beauty of it, the blockchain. And you can't move it. So once you've done it, it's done.
As for our last question, I would like to zoom out a little bit from high net worth individuals, but I'm sure I'm still within your experience. Again, that's a discussion we had previously on our podcast, but we'd really like to hear your point of view on this, James. So when it comes to commercial banks in the GCC, I'm sure you have the sentiment of when and how and under which circumstance those organizations will be happy to allocate capital and liquidity to real-world assets. A lot of the viewers who are interested in Fatra as a project would also want to know your point of view in that. So I know it's a little bit different from talking to high net worth individuals. There are some differences, but I'm sure you also have some input in this.
Yeah, so we can say it's an example with Bitcoin. When 10 years ago, not one bank would buy Bitcoin. Now we got loads of banks here in GCC, Abu Dhabi. They're holding Bitcoin in the balance sheet, and more they're holding. I won't say names, but everybody is public. There's so many banks holding now Bitcoin, and more the interest is on structured products, or they're creating division, crypto divisions. Maybe they're not offering to retail. Maybe it's not open to retail, but they open more and more to stable coins because they know there's a business there. So banks, they always come a bit slower, but once the regulation is there, they'll come in too. Like I always say, sorry to be talking about Bitcoin, like I say, mining. I see mining in 10 years' time. The banks itself will be buying Bitcoin. So if I'm looking on Bitcoin mining, the banks are going to do, why not? They're going to come into real world assets, more into USDT, obviously, yes. But we're very early days.
I mean that's a good indicator for us, honestly, since we are working in the very early days. So other than regulation, which is a very clear requirement of banks, what else do you think banks would look for? I mean, let's agree that they will come into real world assets at one point, but I mean, why allocate capital for company A, not B? I mean, other than regulation, let's assume that both companies are very well regulated. I mean, what's the next buy after that?
Well, if you're looking on DeFi, where banks invest in projects, in shares, there was it's the same in real world assets. So they will look who's behind the team. Firstly, let's see who's behind, what returns, if they're honest on the returns, and see who's backing up the project too. So the other is a balance sheet. So it's like DeFi will be the same to real world assets.
Perfect. And I honestly think we don't. I mean, there is a lot to prove, honestly, to the bank at the end of the day. But since you're utilizing blockchain, it's not easy or it's not difficult to prove it. I mean, since everything is on chain, there's little dispute that can happen at the end of the day to discuss, for example, default rate or the capital turnover ratio that you have. I mean, everything is registered on chain, and that's the benefits from working on blockchain.
Everything is visible, everything is transparent, everything that you want to make sure of can be seen by everyone, not even just the banks.
Exactly.
But given those big entities with a very lower risk appetite, the disputation is always like, I want to see everything with pure clarity.
Exactly.
And this is what on-chain gives us.
Yes.
Yeah, and now with AI, before it was a few years ago, okay, if you're not technical, you wouldn't see how to find it in the blockchain, you don't know. Now you do a prompt in ChatGPT, and in 2 minutes you have all the data. So it's not anyone without any knowledge of blockchain that can do a prompt, and ChatGPT or another AI that can help them to find out. So in the banks, they can access all this data.
Exactly. So thank you, James, for joining us today. I mean, we really enjoyed it and on a personal basis, and we really do believe that our viewers will also benefit from the insight that you gave us today. Hoping to get in touch with you soon, in order to complete our requirements that we need for our, ecosystem, to finalize building our ecosystem. And for our viewers, thank you again for joining us on our 6th episode. Hoping to see you soon in more Fatra podcasts. Thank you.